right. Well, this was just me. There's like an appendix in the book because I mentioned these spreadsheets, right? Or where they, so I just want to walk you through what one would look like before we had. So this has our assets, liabilities, stockholders' equity, rent, revenue, and expenses all summarized on the unadjusted trial balance columns. That would be the same as if you had a standalone document called unadjusted trial balance. Then we do our adjustment data and create the adjustments, just like we did in chapter 3. And then we can say, okay, so this has a debit balance of 2,065, no adjustment, so it's going to have a new debit balance of 2,065. This one has a debit balance of 2,220, a debit adjustment of 500. So what's going to be the new balance of this one?
2,700.
A debit of 2,720, right? Yeah. This one has a debit balance of 2,000 and a credit adjustment of 1,240. So it's going to have a new balance of
760.
Of a debit of 760, and so forth. So it's instead of doing a ledger or something, it just lets us do it right across the columns. So now we have an adjusted trial balance, all right there. We'll see that our debits and credits equal each other. So once we have an adjusted trial balance, we can figure out our income statement amounts. And that's going to be our revenues, our expenses, and then our balance sheets. Assets all have debit balances, liabilities have credit, dividends have a debit. Okay. And then there's these sort of empty boxes at the bottom. And so you'll see on this one, when we add up our credits and our debits, they don't balance. Why? Because there's a difference between our revenues and expenses, and that amount is our net income. So we enter that here, and then we can add, there's our expenses plus our net income, equal our revenue. But we can't just add something on the debit side without putting it on the credit side. So we put it over there. That represents the amount that's going to go to retained earnings as net income, right? And that actually adds up to the difference between all of our assets and liabilities with dividends figured in. So that's how you do this spreadsheet. A lot of times in the good old days, accountants would do this spreadsheet because then they're like, I have all the data I need to prepare the financial statements right there in one place.